Hello, this is Brad Harvey with Harvey Investment Management, and today we're going to talk about an overview of the market performance and overall economic performance in the third quarter of 2021. Well, as things are continuing to improve, as people are going back to work, as people in the virus-infected places of the world are starting to normalize a little bit, things have been off to a very strong start in this country. Economically, market-wise, everything seems to be looking better and better. Well, that was the news through the second quarter. The third quarter tells a little bit of a different story. While still generally positive overall, certainly the growth that we saw in the first half of the year has slowed dramatically. A couple of statistics to share with you that you might find of interest in terms of performance for the actual third quarter. So these are from close of business on June the 30th to close of business on September the 30th. So first of all, gold. A lot of people talk about inflation. A lot of people talk about commodities. Well, gold for the quarter was actually down slightly. Commodities overall did pretty well. Gold was down a little over 1%. Commodities in general, if you look at the broad-based commodity indexes, they were up 4.7%. So there's a little bit of a separation there between gold and the overall commodities. We're not sure why. Certainly the future is going to let us know, but it's a little murky at this point. From a stock perspective, the broad market indexes were pretty flat. To give you the specific numbers, the S&P 500 was up 0.23%. Again, that's 0.23%. The Dow Jones Industrial Average was down 1.3%. And the Russell 2000, the small cap index, was the worst performing of these US broad market indexes, and it was down 4.6%. The foreign markets, if you look at emerging markets, which are the foreign smaller companies and smaller countries, they were actually down for the quarter 8.65%, while the emerging or developed market, non-US, was down 1.1%. So again, relatively flat. A couple of other things that we look at REITs overall, which were virtually dead flat. We follow a broad market REIT index, so that's real estate, income producing real estate. It was almost dead flat for the entire quarter. Then we move on to bonds. Interestingly enough, the 10-year Treasury yield. So the yield on a 10-year Treasury bond on an annual basis was actually up 3.31%. To put numbers on that, it started out at 1.48% and ended at 1.529. So not a big number change in terms of the nominal number, but the percentage change certainly was significant. So what does all of this mean? And by the way, inflation statistics, we don't really have the updated numbers for September yet in terms of the CPI, but it looks like it's been on a pretty good tear for the last 12 months. I personally don't think that it's transitory, as you're hearing on the news. Transitory inflation basically means temporary. Well, I think that the inflation cycle is here and it's going to be here for a while. What does that really mean? So we've got very flat markets, we've got slightly rising bond yields, we've got commodity prices that have gone up pretty significantly. Well, what does that mean for the average investor? Well, it can mean a lot of different things, but it means be careful. We could be entering into a period of volatility. We certainly saw that at the end of September in many, many different areas. And as we saw the yields going up and going up fairly quickly, we saw a lot of the large cap tech and things like that selling off a bit. So keep that in mind. Keep your eye on the market, or we'll do it for you. Thank you.